Hi everyone, I'm Ken from Crypto Trading KS and the inventor of the CTKS method and BORSOG trading. If you're new, a very warm welcome and welcome back to the KS family. Let's run the numbers. Bitcoin is currently down 0.15% to 23,876. Ethereum is down 0.85% to 1877. We know that all investors become traders anytime they buy or sell. The only real difference between investors and traders is how long they hodl for. And with BORSOG ANF, we always think we control the trade, but the market controls the return. We first of all, when placing any trade or investment, because it's basically the same thing, just a different holding period, we think about what if price goes against us, what if it goes nowhere, or what if it goes for us, just like a traffic light. With that in mind, let's have a look at Bitcoin's actual price movements. We can see Bitcoin is currently trading at 23,834. It's starting to lose that lower support line. We're still in the green zone, so price is a little bit uncertain at the moment, but let's drill in and look at support and resistance levels. As a BORSOG trader, you're looking to get in and out of confirmed price movements. The key with BORSOG trading is to get into synchronization with the market. BORSOG trading is a trading and investing technique that aims to synchronize you in with the market. When you're going with the flow of the market, you can scale up, but when you start, just use very small position sizes. This is important. Many people go in, they go all in and more at a specific price. You don't want to do that. You want to make sure you're synchronized before you scale. And if you're not synchronized in, if you're desynchronized in, just descale. What are we observing in Bitcoin's price action? And why are we looking at Bitcoin? Why don't we just go to a beloved alt? Because we know Rule 45 says no alt can escape Bitcoin's gravity. This means we must look at Bitcoin first. 99% of crypto alts will move in alignment with Bitcoin's gravity, so just bear this in mind. Have a look at this particular pattern. What are we expecting next in terms of support and resistance levels? There's a resistance level at 24,011, a further one up 24,576, and a further one up at 25,207. We've got a support level at 23,642, another one at 23,171, and yet another one in 22,782. You can notice that if we actually lose the 23,171 level, we're starting to get into negative territory. We need to be a bit careful if price moves against us. Remember, you control the trade, but the market controls the return. Let's have a look at the specific percentage returns and the drawdowns, if you like. So we're about 1% away from that 23,642 level, about 3% away from the 23,171 level, and about 4.61% away from the 22,782. When we look at resistance, we've got about 0.6% to go in terms of an upward price movement from the basic price that Bitcoin is now. And of course it wobbles around a bit. So up to that first resistance level of 24,011, up to the second resistance level, it's about 2.93, so nearly 3%, up to the 24,576 mark, and about 5.55% up to the 25,207 mark. Please let me know in the comments, where do you think we'll be at in the next 24 hours by the time we make the next video? There's actually a lot of background work that you need to do to answer that question, and you might notice this very pale line behind Bitcoin's price action. What is this, you ask, Ken? What is that line? That's the NASDAQ futures, and we know Rule 225, Bitcoin cannot escape the stock market's gravity, so we must pay attention to the stock market as well. Masterclass students, you'll receive this live chart in LV19. Something I wanted to point out to you. The US market attracts nearly 60% of global investment funds, but have a look at this. When it comes to the US and exchange flows into crypto, look at that percentage. When we divide this 24,284 million divided by the 33,784 million, we're looking at 71.88% of the money in crypto is from the US. Just bear that in mind. That's important. Why is it important, you ask? Because when we think about the SEC, the CFTC, all the US regulations, they actually matter to assets under management. Just bear this in mind. It's really important. And what do we see with the major indices? We can see they've actually broken out from their resistance levels. Do we expect that this resistance won't come back and be retested? Of course we expect that. That's how it works. When we get a breakthrough of resistance, it's very normal for price to come back and retest resistance and hopefully resume off. That's what we want. Let's have a look at the macro picture. And what did we see yesterday in yesterday's trading session? Fear came down slightly. It pumped up slightly and came down. But we noticed the NASDAQ is weakening. So economic confidence is starting to find a support level. What about economic concern? Bond prices did actually come up. Yields came down. So economic confidence is actually falling. And don't forget, one of the most important rules is Rule 4, price moves in waves. And of course, there's so many rules inside the masterclass. When we look at gold, we can see geopolitical risk is actually decreasing. Just take a note of the 1766 level. This particular level is a strong support level. 1690 is also a strong support level for gold, and 1928 is a very good resistance level. And when we look at the dollar, which can be a proxy for safe haven investment in times of economic concern, what we actually see is the dollar came up and hit a level of resistance at 106.962, and it backed away from that. We also have a level of support at 103.398, 100.951, and 98.600. And when we look at oil, oil has been decaying in recent times. It just staged a couple of fake breakouts, but it's coming up to a level of support at 93.49, a level of resistance at 185 cents and 109.21, another further level of support below at 88.59. And when we look at junk bonds, which is an indicator of how much risk tolerance there is inside the market, we can see that's increasing at a decreasing rate. The VIX is very overextended to the downside. This is quite unusual behavior for the VIX. We would expect at some stage a bit of a spike up in the VIX, and we would expect at some stage a bit of retracement in junk bonds. It's all about just normalizing price action, and there's a very strong level of support in the NASDAQ at 12,847.50. Just remember this particular support level. If we came back to that support and then bounced off, that would be really, really healthy. And if we look at the major indices, we can see the NASDAQ is about 3% above its support line, which was at one stage resistance. The S&P 500 is still about 1% below resistance, and I feel the market is being driven by the S&P 500, not so much the NASDAQ or the Dow or the Russell, but actually the S&P 500. The Dow Jones is 2.31% away from its support level, and the Russell has been romping around. It's 6.26% above support. We're seeing annual inflation coming down, as well as the 10-year and the 5-year break-even inflation rates also coming down. The CPI was recently recorded as being flat. And Masterclass students, you'll get this live chart in TM4. There is potentially a trend change in the DXY, and you can see it more clearly on the inverse DXY, this green line. What you can see, just isolating the inverse DXY for you, this is potentially a trend change. So we may see a loss of support here for the inverse DXY, which could mean the DXY will rally. We know it's got a level of resistance above it, but if it gets through that, that could actually signify a trend change. and backed up by the fact that China released exceedingly weak July economic data. The metals and commodity-based currencies such as the Aussie dollar sold off, so we could see the metals under more negative price momentum. Just bear that in mind. And masterclass students, you'll get this in TR23. In LV20, I go through 8 specific government charts which are really important, and if we look at the University of Michigan Consumer Sentiment Indicator, we can see it's just been plummeting down, but this can also be and signify bottoms. When we actually see this plummeting down, it's not too bad a sight in terms that it can actually mean that we've found a bottom. We don't have a recessionary indicator coming through from the government at the moment, but in this case there may not be an actual recession. Goldman Sachs sees a feasible but difficult path for the Federal Reserve, to defeat inflation without a recession. We've been covering a lot of macroeconomic factors in the past couple of episodes. Basically, the Federal Reserve needs to slow things down, but not by too much. Supply chain constraints on the other side of C19 have been really problematic, and if we look at the Federal Reserve Bank of New York, their GS-CPI, what we can see is the supply chain pressures are actually decreasing. To understand how a government calls a recession in the first place, we need to go to the NBER, or the National Bureau of Economic Research. That's the body that actually calls a recession or not. And the NBER's definition of a recession is a significant decline in economic activity that is spread across the economy. Note the word significant decline. To see if a significant decline has actually occurred, we need to go to the US Bureau of Economic Analysis that measures real GDP, or real gross domestic product. We can see in Q1 and Q2, GDP, real GDP, decreased in Q1 by 1.6% and 0.9% in Q2. Is this a significant decline, such as in Q2 of 2020? No, it's not. When C19 hit the world in Q2 of 2020, you saw significant decreases, significant changes. You saw a significant decline in economic activity spread across the economy. Are we seeing that now? Are we seeing something like what happened in Q2 of 2020? Note what happened in Q3 of 2020. Things absolutely took off. But what about Q1 of 2022 and Q2? We're not seeing that. Actually, it's getting better. It's not decreasing at a faster rate. If this was negative, for example, Q1 of 2022 and Q2 of 2022 was even deeper, that would actually lead people to err on the side of, yeah, a recession is here, or a recession is at least coming. But there are some other things to take note. US Bureau of Economic Analysis said basically this is incomplete data and subject to further revision, and it will be based on more complete data that will be released on August 25th, 2022. So this data is not fulfilled yet. And you can see for the other particular areas that go to make up the GDP, we can see that services has actually improved. There's been a significant decline in structures, but that's been offset by the other sectors and their relative weighting, because we have to really wait until the final numbers are in, and there's not too much of a wait. I'll update you when those numbers come in. And when we look at global supply chain pressure, we can see that's actually coming off. That pressure is coming off. That pressure was something that actually broke supply chains when C19 hit. This is a major driver of lower GDP figures. And actually, Goldman expects GDP to grow at 1% pace over the next 4 quarters, even though the declines of 1.6 and 0.09% occurred. And now you know the background on those percentages. It's always really good to go to the source data. With global supply chain pressures easing, we can see this particular index, the MSCI ACWI, which represents 85% of global investable equity opportunities. We can see it's been going up. It's just been going gangbusters, and it's overcome multiple levels of resistance. We could get a bit of a pause and a pullback and a retest and a resumption up. And based on what we're seeing, that is possible. This is what people talk about, a soft landing, which means that you avoid actual recession. The term soft landing came about through Alan Greenspan's avoiding of a recession in 1994 to 1995. One thing to be aware of, if there is a recession in the US, that will decrease consumer confidence even further. This is why we run the numbers. We go to the source data and we actually check out what is happening behind news headlines. What we've actually seen in the past little bit of trading is that Bitcoin has come up that 0.58% and tested that 24,011 mark. A lot of people, when they start investing and trading, they want to make very, very significant percent returns. But you don't need to do that. If you just made 2% return per day and compounded it, you would grow $100 into $138,424. You can see small things create big things, but it's all about consistency. Turning to the top 8 cryptos, let's look at the major support and resistance levels. Ethereum currently trading at 1894. The next major resistance level is 2043. The next major support level is 1758. What about Binance Coin? Looking at Binance Coin, we can see the next major level of support at 290 and 10 cents and the next major level of resistance at 363.70. We can see it's just about midway in there. These are major lines. These are not minor lines. There's minor lines of resistance in here as well. We'll look at those tomorrow, but I just wanted to give you the major lines first. With ADA, major support at 515. Major resistance at 645. What we can see with XRP, major resistance at 38.55. Price is just below that now, and major support at 35.05. For Solana, major support at 32.35 and major resistance at $58.95 or 58.95. Let's have a look at Doge. Major resistance at 884 and major support at 727. For Polkadot, we can see 1061 major resistance and major support at 805. For SHIB, 1871 is major resistance and major support is 1280. Crypto technical analysts, those people trained inside the masterclass, have a very scientific process of analyzing the crypto market. You've seen a small window into what we do behind the scenes. The first thing is we mark up our charts with the CTKS method. Then we look at outside trends. We've looked at a few outside trends in this video. Then we come back inside the crypto market, seeking to find the market's focus, understanding that opportunities reset daily, and enhancing our pattern recognition. Before we actually pull the trigger and buy or sell, and there's many ways to do that, we make sure that we've mastered emotional control. We have a positive excellence foundation and real wealth as our focus. That's really important. Rule 733, professionals are not emotional. And this is important because if you're emotional, when you place your buys or your sell levels, you'll keep on moving them or you'll fade yourself out of the market. This is why we get very specific on specific support and resistance levels. When you see, for example, Bitcoin hitting a resistance level, what you will find is that 99% of the alts will be hitting that resistance at the same time. Keep your eye on Bitcoin. It will tell you everything and more that you want to know about your beloved alts. Something else to keep in mind are the longs and the shorts. We can see the shorts have been gaining more confidence. Why are they gaining confidence? Because yesterday, the probability of the Fed raising 50 basis points in the next meeting was 61.5%. It's dropped to 59.5%. The Fed rate potential increase of 75 basis points yesterday was 38.5%. Today it's up to 40.5%. This doesn't go well for crypto or the markets when the Fed raises rates aggressively. So just bear that in mind. And what do we see? The longs are still coming out of the market. Turning to liquidations, we can see 106.01 million in liquidations across 35,812 positions, and we know that's really low liquidation levels. Over the past 24 hours, about 62% of total liquidations have been long. What about the past 12 hours? About 66% long. Past 4 hours, nearly 70% short, and the past hour, wow, ay caramba! 92% short. So you can see these short liquidations have been driving the price up, but it's driven it up to a resistance level at 24,011, and it's actually been rejecting that resistance. Come on, Bitcoin, get over resistance! The greatest gainers in crypto today have been EOS, up nearly 12%, DOGE, up nearly 8.2%, Anchor 9.23%, Chili's 6.1%, Tezos 5.2%. Let's go the other way and let's see the greatest losers over the past 24 hours. Celsius down about 12%, CVX down 6.2%, LDO down 4%, Rose down nearly 3.8%, Leo down 3.21%. For example, recently SHIB has been on a real rally, and what you can notice here, Bitcoin's gravity, that's the blue line. As Bitcoin was coming up, SHIB was also coming up, but look what happened with the directional alignment. What you actually see is that specific cryptos, even when they break from Bitcoin's gravity, they can only do so for a certain amount of time. Everything readjusts. It's gravity after all. What you will typically find is an over and under exaggeration, and if something is under Bitcoin's gravity, it will eventually be pulled back and resynchronized with that gravity. That's what we've seen with DOGE and SHIB recently. And you can see just how under Bitcoin's gravity SHIB was, and then it resynchronized. You learn about this inside the masterclass. Before you place your buys or your sells into the crypto market, the CTKS Creed can prime your mind for profitability. These are just a series of affirmations we always say each day. I know the universe wants me to succeed. Every day I show kindness, integrity, and gratitude. I know opportunities and life reset daily. I am worthy. I go slow to go fast. I start small and scale with BORSOG. Life pullbacks give me the strength for the next life rally. I am dedicated and committed. I win or learn and never blame. To finish off with, let's see where there may be BORSOG opportunities in the crypto market. This is what we do each and every single day. We know opportunities reset every day. And in crypto, opportunities can reset every minute. The volatility inside the crypto market is really extreme. And that's what makes BORSOGing such a fantastic idea. To BORSOG, you seek to gain synchronization with the market. You can think about BORSOG kind of like this. If you're singing a song and you're off key for some reason, that means you're out of synchronization with that song. But if you sound like the person that originally sang that song, you are in synchronization with that song. Just like in crypto, there are songs that you can't sing. You'll just be always out of synchronization. And when you find these desynchronized opportunities, don't worry about them. There are so many opportunities in crypto. Just think about it like a song that you can sing. Your voice can sing certain songs and not others. This is exactly like trading and investing. Find what you're good at, find what aligns with you, and do that. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.